afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. It's a lackluster day of trade for the markets. Benchmark indices have given up their gains to trade flat now. The PSU banking index is the top sectoral loser. MotoCorp is among the top losers on Nifty ahead of its first quarter number. Recoveries from its watch list will be something to watch out for. Coffee Day Enterprises locked in lower circuit after the promoter VG Siddhartha went missing last night from Mangalore. And Bank of India is trading with losses after its first quarter results. The numbers were amiss on most parameters while asset quality saw a deterioration. Good afternoon, Neeraj. Well, the template remains the same. We are seeing selling pressure at higher levels given up all the gains that we saw in the morning.
Yeah, 0.5% higher, and despite that, and of course, we were a bit of an anomaly because the rest of the US markets at least didn't do as well yesterday. Asia was doing okay, and maybe that gave us a bit of a leg, but that's been sold into midway through trade itself, and now we are meandering in these same levels for the last couple of hours of trade. Let's see if we succumb to some more selling pressure during the afternoon's trade. Banks correcting. Remember, yesterday we spoke that ICICI Bank will not be giving the support today as it gave yesterday, and no surprise that the Bank Nifty is in the red. The market breadth should come up on your screen just momentarily for the broader markets as well, and big time in favor of the declines. 3:2 in favor of the, actually 3:1 in favor of the decline. So that ratio is not looking all that great. Pull up the heat map for the Nifty 50 and quickly show what the Nifty 50 stocks are doing in the session. Well, it might seem even Stevens, but a lot of pressure. India Bulls Housing Finance down 4%. Grasim, well, started off marginally higher, but Vodafone Idea's selling pressure is showing in on this one again. So 12% gone in the last 2 days. Auto is not seeing a respite. At least MotoCorp ahead of the numbers is clearly down and out 3.5%. And selectively some banking names, either exposure to X company or Y, are all coming under pressure. Yes Bank, IndusInd Bank at the broader end, RBL, etc., which I'm sure Devina will talk about. All of them under pressure. What's done well? Bharti up about 3.5. I think the Bank of America Merrill Lynch report speaks about what a potential price hike could do. So that stock is doing well. TCS and HDFC Bank are help holding up the index, and ICICI Bank is up about another 0.75%, but those are few and far in between. The pressure points still remain, and that's looking very, very ugly. Devina, what about the broader end of the spectrum? The market breadth, if that is any indication, there's a lot of selling.
Yeah, and it was right from the start of the trading session. So while at least you had the large caps when they started off the day, they started off positive. The mid caps actually just started the day on a flattish note. The breadth was negative right from the start of the trading session, though it did reverse in the middle. But clearly no respite whatsoever. It's yet another day added to that long list of days where we've seen negative returns for the indices and not being able to hold on to those gains in the latter half of the trading session. Starting off with the big stocks in focus, Cafe Coffee Day, obviously on the back of its promoter going missing. RBI Bank and Karnataka Bank, in conjunction to that, with regards to the exposures that they have, Karnataka Bank though has made a clarification that 152 odd crores is not the listed entity, Cafe Coffee Day Enterprises, and they're all well covered for. So they're not, they've come out with that clarification. However, the stock is still down about 4%. Other stocks, earnings, Bank of India, 242 odd crores in terms of net profit, but asset quality deteriorating, not going down too well. Stocks down about 5.8%. Heidelberg Cement, surprising because the numbers came in slightly higher than expectations, but the stock's taken a knock of about 8%. And VIP Industries is up about 10% right now. So while they did have that exceptional loss component of about 48 odd crores, which caused the profits to dip about 42%, all in all, on an operational basis, it was a good quarter because their EBITDA margins actually expanded by about 200 or 250 basis points. So VIP is up about 9%. Other stocks on the move, Strides to Shun on good numbers, AstraZeneca, Bharat Electric. These are all the names that have been buzzing since morning. On the losing side, Gen Irrigation, Minda Corp and Persistent Systems are the ones that are seeing some amount of heavy selling coming into today's session. Aside from that, some stocks on the back of volume. So you've got HEG and Graphite now that have flipped over, and you've actually seen them gaining ground on the back of good enough volume. So HEG trades about, that's down about 5.5%. That's on the back of about 5 lakh shares for HEG and about 12 lakh shares for Graphite India. So these are the stocks which are witnessing some pressure in today's session. But what's been happening in the futures and options space? Navneet is going to highlight that for us. Navneet, good afternoon.
Good afternoon, Devina, and thanks for that. Looking at Nifty Futures, we've not seen any major build-up coming out, though yesterday there was some some 5 lakh shares being added. Right now, the open interest is just up about 2 to 3%, but premium definitely from the start of the series has been falling. Currently, the futures are trading with a premium of 16, and remember the August series started with a premium of about 48 points. For Bank Nifty, it's down about 85 points right now, and on the future side, we are seeing a premium of about 92, and there is more action, by the way, seen on Bank Nifty Futures as open interest has surged about 14%. Looks like there are some fresh short positions being taken here. India Volatility Index, which surged quite sharply in yesterday's session of about 7%. Right now, it's just off the day's low, I believe. It's just about flat, still at around 13.08. Quickly, in terms of options, what's happening? Maximum open interest is at the 11,300 call and the 11,200 put. Put writers of 11,200 are safe till the time index touches that mark of 11,150, because the premium is somewhere about 45 to 50, and that also happens to be a 200-day moving average of about 11,140 is the level. So 11,150 on the downside and 11,315 or 320 on the upside is the range that we're getting for the near term. And in today's session, we have seen a lot of OI addition coming in for the 11,300 call, which has added about 23 lakh shares, and maximum addition on the put side has come in for the 11,100 strike, adding about 11 lakh shares. Stock futures, 2 gainers, 2 losers. Strides Pharma, which we've already mentioned on the future side as well. We are witnessing fresh long positions, and the stock is trading around its 50-day moving average. Not only that, we've seen action on the cash side because the stock's moved up on good amount of volumes. As you can see on your screen, the white line is projecting today's volume vis-a-vis the average volume that we've seen in the last 20 sessions. That's being projected on the blue line. The other one is Bharat Electronics, which has bounced from its 200-day moving average. Remember, the stock was down, but the earnings came in operationally. I believe it was a good quarter. There was some margin expansion of about 180 bips, and this stock too has gone up on good amount of volumes. On the future side, 7% higher, fresh long position seen as open interest is up about 20%. 2 losers, Bank of India just came out with its numbers, shorting seen post the numbers, fresh 52-week low, asset quality deteriorates, provisions also at elevated levels of about 1,900. And lastly, RBI Bank touching fresh 52-week low. That stock too has come in under pressure in today's trade, but it's not just about today. It's down 28% since the time it has declared its numbers. On the future side, significant amount of OI build up, 29% higher, 8% lower for the spot, clearly telling you at every level now there is shorting seen for RBI Bank.
Okay, let's take it to some key things to monitor. A low base is likely to aid Axis Bank's net profits growth by over 2.5 times. A key thing to watch out for would be recoveries from the write-off pool. Shefali Malik is here to take us through the expectations from the private lender. Shefali.
We can expect healthy set of numbers from Axis Bank for the first quarter. We are expecting the net interest income to come in at about 5,965 crore rupees. That will be a growth of about 15% on a YY basis, and pre-provisioning operating profit growth as well is expected to be a strong number of about 16%. Profit is expected to jump by a whopping 165% to about 1,855 crore rupees, and even on a sequential basis, it's expected to be a strong growth for the bank. The factors that we'll be looking forward to, various brokerage houses have a very wide range of estimates when it comes to the loan growth that is being expected from the bank. So the number is as low as about 13% to as high as about 18%. So that is one number that we look forward to from Axis Bank. For ICICI Bank, it was about 15%. And a couple of banks have disappointed when it comes to the loan growth in the first quarter. So we look forward to that keenly from Axis Bank. Deposit growth is expected to be around 24%. So that's also expected to be a very strong number. So last quarter, it was to the tune of about 21 odd percent. So it's expected to jump quite meaningfully from that level. Margins as well expected to remain stable at about 3.4%. And slippages is one key figure that we'll be looking forward to. In Q4 of FY19, it was about 3,000 crores. This time around, we are factoring in a number of about 2,400 crore rupees from Axis Bank. So that number will be taken well by the street. And also, we can expect a strong traction to come in as far as the recoveries are concerned, and especially from the written off pool of assets. So that's what broadly we'll be looking forward to from Axis Bank earnings today.
All right, let's see if it can if we can see an encore of what ICICI Bank did, at least in terms of slippages and asset quality from Axis Bank. But moving on, the automobile slowdown is not going to spare Hero MotoCorp as well. While a 3.5% volume growth this quarter may cushion some of the losses, the margins are still likely to fall by over 1%. Yatin Mota, he's here to take us through the expectations from Hero MotoCorp. Yatin.
Afternoon, Devina. Something like other auto companies do not expect a great quarter from Hero MotoCorp. In fact, if you look at the overall matrix at this point in time for Hero MotoCorp, we are expecting a 7% kind of a decline on a year-on-year basis when it comes to the revenues. As far as EBITDA and profits are concerned, a double-digit fall is expected. Of course, the profits would be supported to a certain extent because of the higher other income. But given the fact that we are looking at discounts in the marketplace which are higher, volumes which are lower, we could obviously see pressures on margins. Margins are expected to decline by nearly 150 basis points odd on a year-on-year basis because of the reasons that I was talking about earlier. Of course, the key issue to watch out for will be the margin performance and also the management commentary as to what kind of a overall demand scenario they are looking at, especially in the short term. Post-August, most of the auto companies we speak to do expect some demand bounce back. But the rural markets are a key, and the festive season is something important to watch out for from the management commentary and the overall situation on the ground and its assessment.
Okay, Yatin, thanks a lot for bringing that preview with regard to Hero MotoCorp. But the other big company which will be coming out with the numbers is Tech Mahindra. The first quarter is likely to be muted one, while it will also bear the brunt of wage hikes as well as higher visa cost during the quarter. Seasonal weakness in some of its subsidiaries is also likely to impact the top line. Agam Vakil is here to take us through the expectations. Agam, over to you.
Right, Navneet, we are expecting a 1.3% decline in dollar revenues and about 1.7% decline in rupee revenues. We do know that there's going to be some pressure on the margins, which is why we're expecting that to come in at around 13.3% against 15.4% sequentially. We could see profits under pressure, declining by as much as 13% quarter on quarter. Now, coming down to the top line, the reason behind our expectations of a decline is essentially one, seasonality in one of its biggest subsidiaries, Comviva, and secondly, there has been a delay in decision making, which is why there will be a little bit of pressure when it comes to your top line coming forward. We have to remember that when it comes to margins, there will be the aspect of wage hikes, higher visa costs, as well as stronger rupee against the US dollar, which will all bear down on not just the margins, but also to a certain extent your top line going forward. What are we keeping an eye on? Timelines on 5G. Now, we all know that 5G has been trickling in very slowly in terms of allocation in Europe, and that is one of the bigger verticals for Tech Mahindra. So it's going to be a very important factor to watch out for, and the commentary coming out as to where the allocation currently stands and what it can do for Tech Mahindra eventually. On the whole, we're expecting a very quiet quarter for Tech Mahindra though.
Okay, and with regard to VIP, Agam, it was an operationally strong quarter for the company while the bottom line was dented due to an exceptional item. Could you take us through the numbers, what actually stood out this time around?
Yes, absolutely, Navneet. So let me just start off by the top line. The top line did see about 9% growth, and the number coming in at around 564 odd crores was just a tad below street expectations. The real surprise here for VIP Industries is the fact that we are seeing a significant expansion in your EBITDA margins as against a contraction that was expected by the street. So we saw margins come in at around 22% against the expectation of 15.2%. So that certainly is a very good jump as far as margins are concerned, considering we have seen a lot of volatility in input prices. I'm going to come to that. Let's also talk about your profitability. Now, profits have declined on a year-on-year basis, down by 42%, but this is because of an exceptional item. Now, we do know that in the quarter, the company had faced a certain fire, and because of this, it has seen a certain loss when it comes to properties and property and plants, and they have actually incorporated a loss to the tune of around 49 crores, and that's the reason why this exceptional loss is the reason why we are looking at a decline in profits. That said, the company has said that they have claimed for insurance, and they are expecting that they will be adequately will be given those funds back. That said, when it comes comes to gross margins, despite the fact that we've actually seen a rise in raw materials costs, gross margins have, the operating margins have expanded, and that is, of course, is a positive, and that's the reason why you're seeing that strength in the stock for now.
All right, Agam, we'll leave it at that. Thanks very much for that. So that is Tech Mahindra and VIP. Tech Mahindra will report its numbers after market hours. But let's begin with the market voice then. Vinay Paharia, CIO of Union AMC, is joining in right now on the show. Thanks very much for taking out the time, Vinay. Let's begin with an overall perspective on the markets. Slightly subdued over the last entire month, where we've seen that pressure building up. You've seen FIIs pulling out day after day. What does one do now in terms of whether sitting on cash is a better option, or to start looking at value picks?
Yeah, thanks for having me on the show. So if you are investing in equity, I think the biggest mistake which you would do is to look at very near-term developments and near-term happenings. I would encourage all your viewers and investors to look at longer time horizon when they are investing in equity, because investing in equity over a longer period of time is far less riskier than investing in bonds. So coming back to your question, yes, right now the markets are subdued because the economic growth environment is weakening in the near term, and that is causing some bit of nervousness in the markets. However, if I look at a longer term picture, the picture is improving substantially. Some of the key drivers of markets which we think will drive long-term returns are turning favorable. So for example, one of the biggest drivers is decline in interest rates. As you are aware, equity are long duration assets. So even small declines in long-term cost of equity can re-rate equities materially. And this is what is happening currently. The underlying cost of equity is falling, and we think that this should result in meaningful appreciation in terms of multiples for equity over a longer period of time. Add to that some of the key positives which we have seen recently in the form of a stronger government with a far more political capital than it ever had. We have stable to declining commodity prices, and above all, reasonable valuations. So combine all of this and we have a healthy mixture of good potential for long-term investors.
Well, it seems to be a little bit of a far cry at this point because the nervousness and the jitteriness with regards to taxation on FPIs, earnings which are elusive to most of the companies at this point, seem to be bogging down the market sentiment. And I just want to quickly pull up the indices, because that's the sudden drop that you're seeing on the Nifty Bank, which is now lost about 1%. Nifty 52 is going the same way. So that steep drop in the last few minutes of trade while we were having that conversation is once again brought the Bank Nifty back towards levels of closer to 29,000. Whether we breach that on the downside, I know, is another matter altogether. But for now, it looks like the weakness has come back in.
Yeah, if you can pull up the Bank Nifty MRR as well, just to show you which of the constituents are correcting thick and fast, because Devin is right, that's a very sharp drop, 250 odd points gone at close to 29,000 now. Not that there were any buy calls that came in the morning, but the fact that it's corrected so steeply should get the MRR up on the screen just to mark the kind of stocks that have gone down. But while we're waiting for that, Vinay, what's the call on Bank? Okay, this is the MRR, of course. And Yes Bank, this is YTD performance. If you can get today's performance, let's change that to 1 day and just show you what's moved down. RBI Bank is now 9.5. Yes Bank about 5.5. BOB, IndusInd Bank. So it's almost across the board without exception, save for HDFC and ICICI Bank. All of the stocks have corrected thick and fast, but clearly some of the private sector banks are now participating as well.
I think IndusInd Bank over the last few minutes has dropped a little bit more, I believe. I think it's down about 4.5%.
5% now, yeah.
5% now for IndusInd Bank. So, you could see pressure building up on most of the other private sector banks, and SBI too, actually. The one that had been probably holding out is also gradually deteriorating.
Yeah, it's certainly looking weak. Vinay, what's the call on banks here? I mean, they're facing these maybe not really large asset quality issues as they were in the past, but every now and then there is an account which crops up, which for whatever reason and that's throwing a spanner in the wheels, especially of some of those smaller banks, wherein even a small default by a company really leads to a very large disruption in the quarterly numbers for any mid-sized bank.
Yeah, so banking is a business of leverage, and hence you need to pick up lenders who have discipline in terms of underwriting, because for every 100 rupees which you give as net worth, the banker leverages 20 times and lends it to the customers. And hence, as I said, underwriting capability is very important, and track record of good quality underwriting is important. And hence, if you have investments in such entities, then it's best to remain invested in them for the long term, simply because this is a business which has generated strong returns on equity and strong growth over a longer period of time, and is in fact one of the best plays on India growth story.
Well, barring few of the banks, and you can actually pinpoint HDFC Bank, most of them have fallen into that pitfalls of bad underwriting, and that's the result why there is such a big cleanup which is taking place on both PSU as well as the private banking space. Hi Vinay, good afternoon. You mentioned the long-term growth story of India is intact. What do you do now when markets have fallen from those levels of 11,900 to about 11,100? Where are you seeing value? Where are you deploying your money?
So in terms of key sectors which we are being overweight include industrials, where we think there would be a cyclical recovery over the next 3 to 5 years, and the valuations are reasonable. We are seeing value in consumer discretionary, predominantly automobiles. We are seeing value in utilities, and we are seeing some pockets of value emerge in financials. So these are the areas where we are seeing opportunities.
In terms of automobiles, Vinay, is it the valuation comfort, or do you actually see the turnaround happening now in the second half of this fiscal year? Because the slump that the automobile sector in India has seen, it's been the worst in the last 5 years.
Absolutely. So slump is extremely strong, but when you are an equity investor, as I have emphasized, we need to look at beyond the next 1 year, 2 years. And when you look beyond that, you will realize that these are companies which are strong consumer products, consumer franchises, with returns on capitals in excess of 40-50% in most cases. Many of them are debt-free and net cash companies. And when you look at that, you will realize that there is strong value coming in predominantly from fall in share prices. So you're right, it's predominantly fall in share prices which is attracting us, and we do not have any capability to forecast what will happen in the near term as far as business is concerned.
All right, RBI Bank, I mean, you just need to have a look at that one, because it still has, a big consensus buy rating from the analyst community. If you have the ANR function of RBI Bank, even though the stock has come off sharply, in the month of June, the average analyst target price for this stock was hovering somewhere closer to 720 odd. From there, it has come off, and now the target price stands at about, the consensus target stands at about 573. That is still a 40% upside from the current market price of the stock, which is really amazing to see how you've still got about 64% of the analysts recommending a buy on the stock with all the possible overhangs that you've seen on the stock.
Actually, it was the commentary. I remember the numbers were pretty much in line with what the street was expecting. The commentary with regard to how the credit costs in the coming quarters can go up by almost 50 to 60 basis points. That spooked the markets, and I think the stock reacting 30%. It's down actually 30% since the time the numbers have come out. Speaks volumes, but I think it's the management getting candid and giving some bit of outlook what can happen in the coming quarters is what spoke the markets with regard to some of these banking. You also had HDFC Bank clearly coming out and saying how the retail side of the business could get impacted because of the slowdown.
And then there's been a course correction since then. So about 100 rupees pre-results, 100 rupees post the result day, and now another 100 rupees. That's shaved off 300 rupees since
matter of weeks.
One fortnight, matter of weeks, a fortnight or thereabouts. It's just unfortunate what's happened to RBI Bank and the way the stock prices have come off. So I heard you mention in one of your answers that the long-term picture is now starting to look attractive, and correct me if I'm wrong. Where do you have the confidence that earnings will show up over the course of the next 12 to 18 months?
So as I said, it's not dependent on the next 12 to 18 months. In fact, over the 5 years, if you look at individual companies, you will realize that earnings growth has been reasonable. The reason why it doesn't show up in index P numbers is because of various anomalies. And these anomalies are long enough to discuss on this short call. But some of them include, for example, some of the parts. Some companies have a meaningful share of their business coming in from subsidiaries which do not generate reported profits currently, but they are valuable enough. For example, it's evident in one of the largest Indian companies. So these are things which do not get captured in earnings, but it gets captured in fair values. And hence, we tend to look at something which is much closer to what drives value, which is fair value. And according to us, fair values have compounded at double-digit pace in the past 7 years. And in our estimates, these numbers would continue to compound at least nominal GDP growth rates in the next 3 to 5 years. As far as your question on next 12 to 18 months, it's very difficult. In fact, even most company managements have come on conference calls and have now stopped giving guidance in terms of what is going to happen over the next 6 months or 12 months. So if the same applies to us, we are not good at forecasting what's going to happen in the near term. But yes, over a longer period of time, studying what has happened in the past, we can extrapolate some of that into the future, that India's GDP growth will get manifested in the form of reasonably good fair value growth, which will drive markets going forward.
Okay, so just one final question, Vinay. And then if you can share a name of a company, then great. If you can't, then probably a sectoral view. Where does one seek refuge now?
So as I highlighted, there are a couple of sectors where we are seeing value. One of them being industrials, the other one being utilities, the third one being consumer discretionary. So these are areas where we see value, and in fact we are seeing value emerging even in the financial space. So these are the 4 areas where we are seeing value emerge.
Okay, value emerging. Well, that's a let's call that is debatable on autos at least, but yeah, some people like autos at the current price. Rhythm Desai does, a few other people do.
He's been liking autos since some time.
A month now, yeah. But
more than a month. When he last spoke to us, he said he was piling up on autos. I think at that time, Maruti was somewhere closer to 7,500.
7,000 really? Okay, but yeah, never mind. So there has been course correction for sure. Depends on where you believe value could be emerging. But Vinay, interesting. If the auto stocks do run up, then I'll be happy for your investors. Thanks so much for taking the time out and being with us today, though.
Thank you.
All right, let's wait and watch how it shapes up. Okay, in some news, by the way, just coming in before we move on and get back to the equity markets, this is, of course, market linked, of course. The National Company Law Appellate Tribunal has asked lenders to call for fresh bids for JP Infratech. Arpan Chaudhary joins us now with the details. Arpan, good afternoon.
That's right, Mira. So in effect, it is back to a fresh start once again in the JP Infratech case. The NCLAT today has said that the fresh bids now will have to be invited from all who are eligible to bid under the Insolvency and Bankruptcy Code, which means that as far as the promoters of JP Infratech are concerned, they are ruled out from the bidding process. But apart from them, everyone who is eligible will be allowed to submit bids. Also, the 270-day period, which is mandated for resolution process under the IBC code, that has been extended by 90 days, which means that the NCLAT has for now saved the company from liquidation, because that is what happens once the 270-day period expires. The appellate tribunal said that this extension has been granted in view of the extraordinary circumstances. Apart from that, in the past, the companies which have bid, such as the NBCC, the NCLAT has said that their past bids won't be considered, but it is open for them also to apply for or to take part in the fresh bidding process, which also will include the Adani Group, which has expressed interest in bidding for JP Infratech. The court said that they're not expressing any opinions on the request made by Adani as well as NBCC, but in total now it's again a fresh bidding process once again for JP Infratech, which has to be concluded now in 90 days.
Okay, Arpan, we'll leave it at that. Thanks much for joining us and giving us that perspective. So that's, of course, the news on with regards to JP Infratech. Okay, well, the Bank Nifty is under a lot of pain, but let's talk about some key charts and some key stocks in focus. Before I throw light on persistent, AMC Bank has given a chart indicating a key support level for the Nifty Auto Index while giving out its top ideas on the sector. Yash Upadhyay joins us right now with some details. Yash, what is it that they are saying about the auto space?
This is a clearly contrarian view that CIMB has now. What they are saying, and this is the Nifty Auto Index on a weekly time frame over the last 5-year period, and the red line over here, that is the mark of support for the index. Now that stands currently at the mark of around 6,800. Now what they say is that from the peak of 2018, the index has corrected almost 43%, and in the range of 6,700 to 6,860 lies a strong support for the index, because this is the last time when it started the rally. So from these levels, this was when it came down to these levels last time, it managed to start a new rally on the higher side, and we are currently now filling that gap and coming down to these levels. So they are of the view that at this current level and around that mark in the range of 6,700 to 6,860, there should be a halt to this current move on the downside, and we should see a meaningful pullback. Now take a look at the RSI as well. Now both on the daily as well as the weekly time frame, the RSI has been extremely oversold, so it has crossed below the mark of 30 on both of these time frames. In fact, more it's below the mark of 28 as well, which indicates that the stocks have been pushed way lower than what they should have been, and because of that exaggeration, we've seen the index fall to these levels. But in terms of individual stocks, they are bullish on Amara Raja Batteries, Bajaj Auto, Eicher Motors, Maruti Suzuki, as well as Tata Motors. Now, not a whole lot of an upside. They expect a 10 to 15% move on the upside for each of these stocks, with a strict stop loss of 5% from where they are currently trading at. Back to you.
Okay, thanks a lot for that, Yash. That's of course the view from CIMB, and well, let's see if there is a reversal. There are two people. There's of course the fund manager who was with us, Vinay. And now CIMB, the brokerage, are also saying that maybe there is some bit of upsides there. Let's ask our technical experts if that indeed could happen. Sachidanand Uttekar of Trade Bulls with us on the show. Sachidanand, let's start off with that. Then we'll get to the index at large. But is there any chance of there being a reversal on the auto index? Does it come on the charts? Is it at some key support levels?
Good afternoon, Niraj. In fact, I heard the conversation. In fact, whatever has been said is true. In fact, if you look at the weekly indicator, it is grossly in the oversold territory. And if you look at, most of the chart structures of the key components, they are slipping towards or they are trading towards their near-term or long-term supports. So probably if you look at Nifty Auto as a sector, we saw the selling pressure getting aggravated somewhere close to December 2008, and if you look at the entire contraction, we are seeing that there is a falling wedge kind of a formation. The falling wedge in a declining market is a sign of a reversal. So, but if you look at the price formations, we are yet to see a reversal getting developed on an absolute price scale on the weekly chart. So I think sooner or later, the conditions are favoring towards exhaustion of the current down move. And I'm very hopeful that in a week or so we may see the indices climbing back above 7,300. So definitely, if someone is riding on shorts and trading this entire sector on the short side, probably it's a very good time where one should book profits and be on the sidelines.
Okay. Let's talk stocks then and get your view on the index as well. While you just spoke about the auto index and the possibility of a reversal there, there doesn't seem to be a downside cap to what the index is doing on the Nifty as well as the Nifty Bank. What would you do, Sachidanand?
Well, on the Nifty, clearly there has been a pressure which has been mounting up, and when we identified this particular setup, Nifty Futures was quoting somewhere close to 11,180. 185 zone. So we believe that this particular momentum can stretch right up to 11,120, and we can see an extension towards 11,050 levels. where we are not of the opinion that 11,000 mark would be breached from here on. So probably, this may be the last leg of the fall. On the higher side, until unless we don't see a confident close above 11,240, we may not see a reversal coming back. So clearly, from a momentum perspective, there is still some room on the lower side. So short positions can be maintained with a stop loss of 11,240 for a final target of around 11,050. When it comes to Bank Nifty, if you look at the overall structure, we have already seen the major fall, and the confluence zone is near to its 200-day exponential moving average. So we are not expecting this particular moving average to be breached immediately. The level of around 28,840 on the Bank Nifty spot, we are expecting that particular level to be held on. If you look at the RSI, we are seeing some positive signs there. So probably this might be the last leg of the declines in both the indices. But from a trading perspective, I think Nifty still gives a very good setup. On the short side, 11,240 would be the stop loss and 11,050 would be the target.
Okay.
Just want to highlight Nifty's breached the 200-day moving average that we were highlighting since morning. It was 11,140. The day low now stands at about 11,129.9, and currently index is trading below the 200-day moving average, a level which a lot of market participants, especially the technical experts, were watching out for. So the selling pressure is only getting intensified as Nifty's now breached the 200-day moving average.
All right, so that's what you've got in terms of the 200-day moving average on the index, but Cafe Coffee Day and a few other related stocks have stuck to the lower circuit after the company confirmed that its promoter VG Siddhartha is missing from last evening. Siddhartha, who is credited for building India's answer to Starbucks, had recently sold his stake in Mindtree to L&T and was grappling with funds. Sujit Mangat, he's here to put the story into perspective for us.
That's
Sujit.
right, Devina. The Cafe Coffee Day group has been struggling with respect to liquidity issues for the last couple of months, and we saw that happening early this year when VG Siddhartha put the entire 20% stake which Cafe Coffee Day held in Mindtree on the block, and eventually leading to selling the entire stake to L&T and L&T taking control of Mindtree. At the end of March 2019, as per the balance sheet available on the stock exchange, the total debt, which is short-term and long-term, was somewhere around 7,900 odd crores. Now we understand that a large part of that would have been paid after the L&T transaction has gone through, which was valued at around close to 3,000 odd crores there. But still, there is a huge debt which is there, which because a lot of CCD was a parent for a couple of subsidiaries which were into real estate development, whether it is in Bangalore or Mangaluru. Both the cities, Siddhartha had some of the projects working on, and there were certain hospitality projects also where CCD was the parent which was using his balance sheet to fund those events. As per the company, the chairman and MD of the company, VG Siddhartha, is still missing since last evening, and search operations are still going on for him. The company has come out with a statement to the stock exchange that companies under the CCD group are run are professionally, and there would be business continuity as going forward. But what is important is the kind of liquidity stress which led to his he being missing since last evening, and that would continue to be a prime concern for CCD going forward and for its investors.
Okay, Sajid, thanks very much for that. So you've got the entire list of stocks there. RBL's exposure, you've got Karnataka Bank, which you said they have 152 crore exposure, but not to the listed entity, and it's all covered up for. So that one clarification coming in there. But I think we'll just bring in Amar Singh also of Angel Broking, who's joining us on the show. Dharmesh Kant is joining us on the fundamental side. Gentlemen, good afternoon to the both of you. I'll start off with you, Amar, since we already took Sachitanand's picks. Let's start off with your stock ideas and then a quick call on the index as well.
Yeah, a very good afternoon. The first one to look at is TCS, and TCS is a buy because in spite of the market witnessing a correction, we've seen TCS displaying positive movement even today, and technically looking on the long-term charts, TCS continues to be extremely positive. Even on the weekly charts, the stock has bounced back. and on the daily charts, the stock is displaying bullish momentum. So TCS is one stock. So any pullback towards 2150 levels can be used to initiate a long position with a stop loss of 2087 and a target of 2265 in the short term. And the second stock to look at is from the sell side, and that is Federal Bank. What we are seeing here in Federal Bank is that Federal Bank, from a short-term perspective, has corrected from almost 110 levels to currently around 91 odd levels. And technically, on the weekly charts, on the daily charts, the stock continues to remain bearish. And also on the monthly charts, the stock has breached a major support level. So any pullback in the stock towards 92, 93 levels can be used as a shorting opportunity with a stop loss of 96 and a target of 87 in the downside.
Okay, so those are some stock-specific ideas coming in from Amar. Sachitanan, very quickly, your stock picks for this afternoon?
Well, I had two stock picks, one on the long side and one on the short side. On the short side, Jindal Steel, is showing fresh signs of a breakdown. We've already seen a formation of an inverse pennant. We're expecting that this particular breakdown can extend the price action towards 128. The stop loss for the trade should be still placed at 137.30, and fresh short should be added in Jindal Steel and Power. On the long side, there's a good, strong positive divergence which is observed on a stock like Glenmark Pharma. If you look at the RSI, we have already seen a breakout in the indicator, and we're expecting that there could be a price action following the indicator soon. So we're expecting a price target of around 444 on a positional basis, and long positions can be considered in Glenmark Pharma with a stop loss close to 428.
Okay, so those are some stock-specific ideas, and more psychological levels, by the way, are being breached. We've also breached the 11,100 mark on the index, and the selling pressure has only intensified once Nifty did breach the 200-day moving average of about 11,140. Quickly, if you can just pull up the Nifty contributors, you've also got something like Reliance Industries, which is a heavy weight with nearly 9 to 10% weightage on the index. And now, Reliance Futures on top, it's dragging the index lower by as much as 23 to 24 points, and your other heavyweights, SBI, HDFC, and Nifty Bank are the primary stocks which are dragging the index lower. Well, some support definitely coming in from TCS as well as L&T and IDC. But talking about the earnings, Bank of India's profit doubled in the first quarter versus the same period last year. The state-run lender did see a rise in bad assets, though. Advait Rao spoke to the bank's executive director and started off by asking them what boosted the bank's bottom line in the quarter gone by. Listen in.
Growth has come from the corporate credit also. It has grown by more than 11%. And the retail growth is very good. It has gone bullishly. And if you look at the CASA side of it, where the low-cost deposits are there, it has increased. The percentage is increased for that. That's where the growth has come, and then the profitability has increased.
So, since January, there's been a 75 basis point reduction in the repo rate by the RBI's Monetary Policy Committee. Have you changed your lending rates and your deposit rates in line with that in terms of monetary transmission?
We have done a couple of rate cuts on the MCLR also. And then we will be looking forward also to look at how the best the transmission can happen, which is linked to the liability side of it also, which can reduce the liabilities, and then we go with further reduction in MCLR. That's the thought process that's going on now.
So in terms of your gross non-performing assets, the GNPA number for this quarter was at 16.5% or 62,000 crores, just around. How much was the slippages this quarter and the write-offs you're expecting for this quarter also? This is us.
The slippages had been around 3,683 crores. In this, the corporate slippage had been muted, whereas the RAM slippages, that is particularly agriculture and retail and MSME, which are all small ticket advances, it had been little higher. But it was within our expectations. Whatever the estimates we had made, it was well within that. Where we lagged behind was a little bit in recovery, particularly NCLT recovery, which we were expecting in big ticket advances. That did not come in this quarter, but it will be accruing in the coming quarter. So that way it will be covered up. Otherwise, the gross NPA is within the expected range.
So are you seeing certain risks or certain stress in specific sectors that you're watching out for? Do you have a watch list for specific companies or specific sectors that you're exposed to?
Yes, we have around 10 sectors where we are not taking further exposure, like steel, textile, gem and jewelry, CRE, real estate. These are the sectors where we are cautious. Not that we are not taking the exposure, but we are cautious and we are very selective in these segments. And we also have our SMA list where over a period of last 1 year, the SMA 1 and 2, which gets reported to Reserve Bank of India, it has gone down substantially because we are able to improve the asset quality and almost 30% of the SMA 1 and 2, which was appearing in last June 18, might have moved to NPA category, but another 30% has moved to SMA 0 or regular category. So that way we are monitoring very closely the advances above 5 crores. And there is a separate credit monitoring mechanism set up for that. And we have a separate SAM vertical created, stress asset management vertical created in the past 1 year. And we are monitoring these accounts very closely to prevent the slippages.
So what is the size of the SMA book as it stands today?
SMA 1 and 2, it is around 15,000 crores.
5 crores above is 6,800. As he was telling it, SMA book has come down year on year from 11,600 to 6,800, 5 crores and above.
So 5,000 crore reduction.
Yeah.
Right. So NBFC sector, housing finance companies, they're facing liquidity issues since last September. Are you lending to these companies? Obviously, the rates have gone up and you'll be more selective in the sort of companies that you're lending to. But in terms of financing the NBFCs and HFCs, where are you seeing the risks or potential opportunity?
See, NBFCs, and we consider the HFCs also when we look at it, we have an exposure. But presently, if we look at our portfolio, more than 92% is AA rated and above. That's the portfolio what we have it. As the market is looking at, we are looking at the liquidity, solvency, and then the governance also. But still, we are looking at the portfolio and we are moving forward into that with cautiously.
So will funding be in the terms of securitization, that you'll be buying assets from these NBFCs and HFCs, or will it be direct lending to these companies?
We are more. We look at more pool buyout is more because we look at the granularity and we take out the pools also. When we look at financing to the NBFCs and HFCs directly, then we look at the builder's portfolio and how strong the builder's portfolio and what risks attached with that, and accordingly we are doing that.
How much securitization have you all done this quarter in terms of buyout of assets from the NBFCs or HFCs?
Actually, our portfolio is around more than 4,000 crores is the pool buyout what we have.
But in this quarter, we have not done anything. We have not done anything.
So you also have an exposure to the Reliance group of companies, ADAG group, SL companies, as well as DHFL. What is the status of resolution or restructuring of those accounts? If you can just give us an update of what's happening there.
In case of ADAG group, the ICA is signed. Like the Diwan Housing, also the ICA is signed in that, and the resolution process in place. And then it's being looked into. It's what type of a structure is required. It's more timelines are required, or restructuring, or what additional funding that will be coming, or it's a management change what we are looking at. That process of resolution is on for that.
When is the sort of timeline you're looking at resolving it? Obviously, there is a deadline that you have to keep.
Those deadlines only, the September deadline, what it is having, that's the same deadlines before that we're seeing.
So, in terms of non-core asset sales, you've raised around more than 200 crores in FY19. How much are you planning to raise, and what are these sort of assets that you're looking to sell?
This year, in the remaining quarters, we are aiming at about 700 crore, where we are planning to divest our stake. The process has started some time back because of certain operational issues. Now it's still work in progress. So basically, from real estate, about 50 crore, and from our investment side, about 700 crore. That's the plan.
Okay, well, that's Bank of India, and banks by and large today have looked very, very wobbly. I was just trying to see stocks which have corrected the most in the last 1 hour of trade. Now, clearly it's banks, but as we said, Reliance Industries is also a principal culprit, so do watch out for that one. And then at the broader end of the spectrum, NBCC is down about 12%. It's corrected another 6% in the last half an hour of trade. SH Kelkar is at 113. That's corrected about 8% today. RBL is down 13%, by the way. Keep that in mind. And all the Indiabulls Group stocks have all corrected. Indiabulls Ventures is down another 5% at 243. At 700, the people were clamoring for the stock. Right now at 243, there are no buyers. This group of Indiabulls Group stocks, Sachidanand, would you go out and initiate a fresh trade on any of these?
Well, not immediately. In fact, we had kept a bearish bias in the counter, and we are expecting a swing towards, say, 525, 10 kind of a swing zone. Probably, we have already seen a swing towards 516. So, immediate basis, I think there's no fresh trade setups. But definitely, the momentum and the trend has been more on the short side. So, in case if someone is holding any short positions here, I think the ideal stop loss for the trade still rests at around 555.
Okay. NBCC, Amar Singh, what's happened here? 12%, it was down and it's corrected even further.
Yeah, looking at NBCC, what we are seeing here is that the stock anyways, if we look at it from a long-term perspective, the stock continues to remain weak. Yes, last week the stock did consolidate, but again has breached. And technically looking at it, it continues to remain bearish. What we are seeing is that the lows that were made in December 2014, that was somewhere around 40, 42. So that's a crucial support zone, because if the stock trades consistently below 40 levels, then the stock could further correct towards 35, 36 odd levels.
Okay, that's NBCC. Remember, the stocks corrected after NCLAT verdict coming about, where they've said the earlier bid of NBCC towards JP Infra will not be considered, and they will be inviting fresh bids, and they've extended the insolvency period to about 90 days, post which we did see more sell-off coming about for this stock. But we were highlighting the banking stocks, SBI, IndusInd Bank, both of them being Nifty constituents, and they've seen sharper cuts. In fact, SBI days low now about 4.5% lower. IndusInd Bank is also down about 4.6%. Sachidanand, at current levels, I know they've corrected a lot, but would you take any bet now on the short side at current levels?
Well, if you really pass me from the banking space, I would refrain from creating any fresh shorts, because if you look at Bank Nifty, we are expecting that it should, pause its bearish momentum somewhere close to its 200-day exponential moving average, where it has been currently placed. But definitely, if you look at something like an SBI, it is now very close to its swing supports of around 335, 330 zone. So, immediate fresh shorts may not be recommended in any of the banking names.
Okay, that is SBI, which is not down about 4.5% plus at this point. Amar Singh, we've been talking about the pain in these Indiabulls group companies, and Indiabulls Housing Finance now yesterday was down 10%, today is down 5%. The previous day was also trading under 526. More downside to this stock?
Looking at this particular stock, what we are seeing is that the low that which the stock had made on, I would say, on 19th of June, so 487. So that's a very crucial low for the stock, and also there at those levels there was extremely high delivery quantity which was purchased. So clearly that acts as a very strong support zone for Indiabulls Housing. So I would say that that's a very crucial support zone for the stock. Currently it's around 530 odd levels. On the daily charts, there is some, I would say, decline in the bearish momentum. However, on the monthly charts, it continues to remain extremely bearish. So what it effectively means is that somewhere on the downside, 480, 490 would be a very crucial support zone, and there is a possibility that we could witness the stock a bounce back in the stock towards. Initially towards, if you look at the levels, it would be somewhere around 580, 600 odd levels, where the stock would meet with selling pressure.
All right, that is Indiabulls Housing Finance. I just want to take a look at a few other names within the broader market space now, and the mid-cap index will come up on your screens, because while the index is doing what it's doing, I think it's broken below that 11,100 mark now. So while obviously the 200-day moving average support falls at 11,144, that psychological mark of 11,100 is also gone. So yet another 100 points shaved off in a matter of probably two days. It's a matter of 1 day. It was up just closer to 11,200 yesterday. So that's the Nifty. Amongst other stocks, so we've spoken about some of the larger banks, but even small banks like Indian Bank are down 9%, IDBI Bank's down 9%, Bank of India is down 7%, Bank of Baroda is down 6%. So it's across the board that the pressure has been building up. Havells is now trading closer to about 630 now. The stock was at 730 just last week. Amar Singh, Havells, is this a chance to sell it further?
Yeah, looking at Havells, what we are seeing here is that the stock is now approaching its very crucial support zone. So technically, if you look at it, somewhere around the current level 620, 625 is the crucial support zone. But going by the weekly charts and the daily charts clearly shows that there is more selling pressure that is to come in the stock, and the stock could then ultimately take very strong support coming around 600 odd levels. So not a good level to short at these levels. Any pullback can be used as a shorting opportunity, because ideally the stop loss needs to be above 660 odd levels. On the downside, 600 should act as a very crucial support zone for Havells India.
Okay, short positions in fact were seen in Havells in yesterday's trade as well, after it posted its numbers on Saturday, which was a miss on all parameters. I think the Lloyd business also didn't do that well, and 5.5% lower in today's trade as well. Just want to highlight few stocks which are bucking the trend. So your top gainer on Nifty today seems to be Bharti Airtel. That's up 3%, and I guess the numbers come out on 1st August, which will be day after tomorrow. Very quickly, Amar Singh, on the charts, Bharti Airtel, a move of 3.5%. Does it warrant any trade?
Yeah, if you look at Bharti Airtel, it's positive on the long-term charts. On the short term, I would say it has resistance around 350, 355 odd levels. So till the time 350, 355 is not taken out, I would say one should be cautious, and those who are long, they should look at booking profits.
Okay, that's Bharti Airtel, 3.5% higher. But moving on, foreign investors have been sellers through the month, and that sent ripples through Indian equities. Yash Upadhyay is here to tell us just how bad the month of July has been for Dalal Street. Yash, over to you.
That's right, Navneet, because for the month, the Nifty is down almost 5.5%, which is the worst monthly performance as far as July is concerned for the Nifty in 17 years. The last time it managed to fall more than 5% in the month of July was back in 2002, when the index had fallen close to 9.5%, and 13 out of the last 18 years, the index has always ended in the positive when it comes to the Nifty. Now, typically, like I mentioned, the month of July has always been positive for the Indian markets, and the expectation too was that after falling close to about 1% in the month of June, the markets would recover and go higher. But concerns with respect to the slowing economy, delayed monsoon, and the imposition of higher surcharge on the super rich as well as foreign portfolio investors, which was announced in the budget earlier this month, has dampened the market sentiment. Foreign investors have withdrawn more than 11,300 crore rupees from Indian equities so far this month, which is the highest number in the calendar year 2019, and also the highest in terms of monthly outflows since October last year. The futures and options series for the month of July too posted its worst loss since the breakout of the IL&FS crisis in October last year. Now, on a year-to-date basis, the Indian markets have significantly underperformed the global as well as Asian peers. Both the Hang Seng as well as the Shanghai Composite Index are higher by almost 9 and 19% respectively, with the Dow Jones too up on a year-to-date basis close to 17%. So the weakness continues to be there in the broader markets, with the month of July, which has been historically positive for the markets, bucking the trend this time around.
All right, Yash, thanks very much for that. That is the chart of the day, and one of the worst months of July for the index in about 17 years. But quickly, a comment from you, Sachit Anand, before we head into some more corporate discussions. If you were to look at some of these smaller banks, Indian Bank, IDBI Bank, Bank of Baroda, Union Bank, would you sell them at this point?
Well, as I said, since we are looking at support getting built up in Bank Nifty, we would refrain from any short positions. But if you look at the overall structure of Union Bank, 69, 68 has been a very strong support for the counter. This is the first day where we have seen some slippages towards 67 on Union Bank, but we are not expecting that this particular breakdown will suffice. We may see a good recovery in the counter going forward. So probably, in case someone wants to invest, I think this is a very good time wherein a stop loss on the trade should be placed somewhere close to 64 on a closing basis, and longs can be considered in a stock like Union Bank.
Okay, let's wait and watch. Now, also speak about Piramal Enterprises. They returned to profitability in the current quarter with margins too seeing an expansion. Let's talk about 1% higher in trade. Shefali Malik spoke to Ajay Piramal. Let's hear out that conversation about the full year growth plans.
In an environment like today, it's not a good idea to talk about what's the target growth rate. I think what we are saying is that we will bring in this equity of 8 to 10,000 crores, and this is really for the long term. I don't think we should look at it from a year-to-year basis. Today, the environment is challenging, but I really believe that the long-term story of India's growth rate remains. My belief also is that consolidation is taking place in the NBFC sector, and those companies which have enough of a capital will actually do better in the years ahead.
So this money that would come in, so would you be using it for, let's say, an M&A activity or buyouts of portfolios, or just to keep the cash on the books?
So it's going to be a combination of all. I don't think we're going to spend too much in buying out portfolios. That will be a limited amount even if we do that. Most of it will be really to do organic growth in the future. Our wish is also that we increase our retail portfolio. Today it's 11% of our book. Going forward is that we want to increase that percentage. So we would use the funds for both organic growth as well as a little amount for portfolios if we find the right portfolios.
Okay, so if not buyouts, the press release actually mentions that you are seeing opportunities due to consolidation in the NBFC sector. So where are you seeing these opportunities?
So as I said, NBFC sector, the consolidation, the opportunities will be that the demand, there will be fewer providers of the funds, and therefore fewer NBFCs, and thus it will be consolidation.
Okay. Sir, there were reports earlier of SoftBank putting in this money and a JV happening between Reliance Jio and Piramal for consumer lending and a fintech company. So what do you have to say about the report?
So that report is incorrect. We are not doing any JV with Reliance Jio. As far as other things, I mean, I don't want to comment on rumors. Every day I hear a new rumor about who we are aligning with. So,
okay. Yeah. So are you in talks with various players for this 8,000 to 10,000 crore piece of capital?
As I said, we'll bring it in, and I want to just restrict it to that.
Okay, sure. Yeah. So when you say retail lending, you'll be looking to increase that book. Is consumer lending one of the books that you would be focusing on?
Correct. Retail means consumer, yes.
Okay. So, lately now people have started saying that consumer lending has also probably peaked in India. So what are your thoughts about the same?
It has, so to say that consumer lending has peaked is actually not correct. Maybe today that there may be not as much growth as you saw last year, but I think this is temporary. In the, as I said, even in the medium term, to the penetration of credit in India compared to any other country, even a developing country, is low. So there is opportunities, and it is still an exciting market.
So one of the questions which probably you are asked very often is with regards to the developer book that you have, because it's quite sizable in proportion to your total book, and that sector is really stressed right now. So, I mean, what are your observations at the moment?
So the proof of the pudding is in the eating. If you look at the quality of assets that we have, it is still 0.9% is our gross NPAs, and our provisioning is more than double of that. Compared to what we had done last quarter and this quarter, you will see that a lot of the assets which were in stage 2, that means there was some stress on that, now have been converted into normal performing assets. So that's one thing. The other thing is that we've found that in the last few months, some of our portfolios we have sold off from our book, and we found that there's been a good interest in them. So if the quality was not good, nobody would do it. And we have a very strict early warning system to ensure that the assets that we have lent to are performing, and we find that it is on track.
Mr. Piramal, I speak to a lot of market players and investors, analysts as well. And when the stake sale happened, in Shriram Transport, and last couple of days there have been reports as well that probably there's some sort of an effort to just keep cash on books, or there is some sort of crunch that is being witnessed at Piramal Group. So what do you have to say about that?
See, a lot of people talk. When we announced that we are going to sell Shriram, it was done long before when we sold off. So does it mean that there was a cash crunch even a year ago when we said it? It wasn't. So I think there are a lot of rumors floating. We can't do about it. But the proof, again, as I said, you have to see what really happens. We said this long ago. At that time, there was no cash crunch. And yet we said it because we realize it's a financial investment. And according to us, that the value that of the cash that we have in the Piramal book the value accretion to our shareholders would be more if we lent out rather than keeping it just as a passive investment in Shriram. So that is the difference. Earlier, it's just a financial investment. We wanted to bring that money into strategy. And do we want to keep more cash on the books? Yes, because as I said, we believe that there will be opportunities for growth, as we talked earlier, whether it's consolidation, whether it is organic growth. So we need cash. That's the only raw material for a finance company. And if you look at our debt equity ratio at 3.8 is lower than most other finance companies.
Okay, I'll just squeeze in one last question. Even though you may say that you're in a good position, but what's happening at a systemic level, this entire NBFC crisis that's been going on, realty companies are cash starved. So what are your thoughts on the same? What is the way ahead to revive the entire system?
So I think it's very important that the government should revive NBFCs. They are very critical to the functioning of India. 40% of the loans last year that were distributed credit was given by NBFCs. And you're seeing the impact of NBFCs, whether it's in the two-wheeler, whether it's in automobiles, whether it's in real estate, in MSMEs. So if you, therefore, the government did announce some measures in the budget, but we are still awaiting the guidelines so that it can be put into effect. So it is important in the NBFC sector, and we have to look after it.
Okay, that's some commentary coming from Piramal after posting their June quarter numbers, and the stock did react positively to the numbers, though it's off the day's high, considering markets have also come off quite sharply. Index, by the way, is slipping lower and lower. We're down 111 points, 11,076, so heading very closer to another psychological level, I guess, of 11,000, and we're headed for...
Okay, hopefully.
No, we've already shaved off nearly 700 points for this month, and we are headed for the worst month we've seen since last September 2018. That's when, by the way, the liquidity crisis had hit the market. But nevertheless, a lot of stocks are moving around. Let's go.
Just before we do that, Navneet,
IndusInd
Bank 7%, Yes Bank 7.5%. Just to mark that, I can understand that Indiabulls housing would have people worried. which is fine. But IndusInd Bank 7%, Yes Bank 8% on the throes of a deal, but down about 8%. And Hero MotoCorp, Sun Pharma down 5%, State Bank of India 4.5%. These are some ominous cuts out here. We are not even looking at a Yes Bank or HDFC Bank or the heavyweights falling. This market is now being pulled down by the non-heavyweights. SBI is arguably the only heavyweight stock in the top 10 stocks which is falling. Just very quickly before we get to Fab 4, I just want to pull up that contributors list, and you will see it's, I mean, you know, that a lot of these stocks which are contributing today are not necessarily the heaviest of names. Reliance still top draw, and then HDFC. So this list doesn't even have a stock like Indiabulls Housing, Hero MotoCorp, JSW Steel or Sun Pharma, and yet all of those stocks are down about 5% apiece. So it's very, very wobbly right now for the large cap space. 500 points for the Nifty Bank.
Selling seen across the board. Both benchmarks as well as broader market indices are seeing selling pressure. But we were talking about the Fab 4 stocks. Let's go across to Mishika Parekh to find out how difficult her job was today. Mishika, over to you. Good afternoon.
Good afternoon, Navneet. Well, it wasn't that easy, I must say. First on my list is Strides Pharma. The stock has gained on the back of very good quarterly numbers. They've beaten all estimates with net profit up 45%. EBITDA's up 3 times and margins stand at 18% versus 9% last year. Now, the company's arm has also gotten into a joint venture with China's Sihuan Pharma with 49% stake. Second on my list is AstraZeneca. The stock has risen as much as 9% today to 2,068 rupees, with volumes trading at 15 times its 20-day average. Stock number 3 is Gulf Oil Lubricants. The stock snaps out of its 3-day losing streak and gains as much as 6%. Last on my list is Bharat Electronics. Fresh longs were seen with high open interest of 22.2%. Back to you, Navneet.
Thanks a lot, Mishka, for bringing those Fab 4 stocks. So there are some stocks actually which are bucking the trend in today's trade. And I'll just take forward BEL, which Mishka highlighted. The stock's bounced back from its 200-day moving average. It has reacted positively to the numbers. It's up about 6 to 6.5%. Remember, markets are grinding lower, but the stock is still maintaining its gains. We've seen some build-up coming on the futures side. If you could just pull up the futures plate, open interest has also gone up quite significantly for this stock. Such then on the charts, considering there is moves seen in both cash as well as the futures side, would you take any bet here?
In regards to BEL?
Yes, BEL.
Yeah, in fact, the support level of around 91 has been held on well. We saw yesterday a swing towards 91, and the way it has rebounded, from the 200-day simple moving average. Definitely, there is some scope on the upside, which is towards its 200-day exponential moving average, which is placed somewhere close to 100. So definitely, we expect, this particular momentum to carry forward. The stop loss for the trade would be a bit difficult, but I think 94.50 would be an ideal one as of now. In case someone wants to, play out for this particular pullback move, 100 would be the target for the trade, and 94.50 would be the stop loss.
Right, those are some stocks that you need to keep an eye out on. And, while the benchmark index is looking weak in itself, we're now approaching 11,000. It's still some time away, but it has breached that psychological milestone of 11,100. Should actually pull up the broader market space in the mid-cap index to see what the mid-cap index has been doing, because the pain out there has been pretty evident. About 2% given up for the Nifty mid-cap index. And, while we were talking about the kind of moves and the upset on the index that we've seen over the last 1 month, and from the fall from that 12,100 mark, it's interesting to see in the last 1.5 year how the index has actually performed and when it has seen these steep corrections. So if the chart can come up, I think the last time we saw a big correction like this, it was in the month of September, October of 2018, where the Nifty actually collapsed about 15% At that time, commentary became really bearish, whether or not it would actually go into a bear market and breach the 20% downside, but that didn't happen. But the recovery from there was even more meaningful. So you actually did manage to see a 20% bounce back from those lows that it made. And prior to that, another 11% drop that you saw in January of 2018. Even post that, you did see a meaningful recovery, another 17-18% upside from where the correction came about. So we're still down about 7.5%. Not to take anything away from this kind of sell-off that we've seen, but there have been instances in the past where you had this kind of selling pressure building up on the index, and then recoveries post that as well, just to put some data into perspective out there. But aside from that, banks, metals, high beta, everything is sold off in today's session. Tata Motors yet again is down about 3.5% at 132. Sachitanan, what's your take on Tata Motors now?
Well, Tata Motors, we continue with a bearish bias on the counter. In fact, we had a open call which for a price target of around 130. So we are expecting that that particular target price would be seen soon. But there could be some more slippages towards 125. So in case if someone wants to create fresh short positions, the stop loss for the trade should be placed at around 136. And still we may see this move getting extended towards 125, 126 kind of zone.
Okay, that's the view on Tata Motors. It'll be interesting to know what the dealing rooms are recommending in today's trade at a time when Nifty is trading below its 200-day moving average. Now let's head across to Darshan Mehta and Yatin Mota to find out the same. Good afternoon to both of you. Darshan, you go first.
Yeah, so one of the stock, Navneet, that dealers are talking about is PVR. Technically looks weak, come below the 200 DMA. It's down trading at the lowest point of the day. So it's down almost 6% in trade, and dealers indicate that some of the HNIs are actively exiting the counter at higher levels post a very weak set of numbers that came out. It's been on a downward slide. So they believe that there could be more potential downside coming in on PVR. The other one is Axis Bank, which will report numbers today. That too is trading at day's low. Dealers anticipate that this time the numbers probably will disappoint. They don't expect a strong quarter this time. And finally, the last stock is UPL. UPL will come out with numbers tomorrow. Some of the domestic funds are actively selling UPL ahead of the numbers, but Yatin has a few more stocks.
Darshan, Reliance Industries, remember that stock is now below the 200-day moving average and 2.5% down. Dealers do expect a further weakness in the stock based on the future and option trends at this point in time. A lot of short selling which is happening in as far as big boy Reliance Industries is concerned. IDBI Bank also is one stock wherein domestic funds are said to be sellers here. Today, both IDBI as well as Bank of India are the top losing PSU banks. And finally, ACC, this is one stock which is bucking the trend. Dealers do indicate that for select cement stocks, especially in the large cap side, foreign institutional investors are buyers in trade today.
All right. Yeah, thanks very much for that, Darshan. Thanks very much for that. So those are some dealing room channel checks at this point. But I believe while we're talking about a lot of gloom on the screen right now, maybe some specific pockets where you could seek some shelter, and that's IT as a space which is up until now withheld the kind of storm that we've seen on multiple occasions. IT as an index is probably one of the few that is trading with gains of more than 0.5% right now. And I believe, Sachidanand, you want to speak on HCL Tech?
Yeah, that's right. In fact, we have a trade setup available here. So if you look at the overall IT index, after 4 days of consolidation, there are bouts which are showing signs of breakout. And if you look at HCL Tech, yesterday we saw a spinning top kind of formation, and day before yesterday there was a similar formation on the lower side, and the support base of around 1000 has been held on well. So we are expecting that there could be a positive or a spike in this particular move. The stop loss for the trade should be placed at around 2010, and long positions can be considered in HCL Tech. The positional target for this particular move is around 1065.
Okay, that's HCL Technologies for you. And barring the IT index, you've got most of your sectoral indices sitting with a good amount of cuts. In fact, the Nifty PSU banking index is down about 5%. Metals has seen correction of about over 3% in trade, and auto continues to slide lower, 2% lower at 6755 for the Nifty Auto Index. I was just looking at Mahanagar Gas. That stock's holding its gains, actually still trading with gains of about 2%. 786 is the level. Amar, on the charts, considering the strength that we've seen in a weak market like today for MGL, would you take any trade on the long side at current levels?
Looking at MGL, I would say on the weekly charts, the stock seems to have formed a double bottom, because if you look at the stock in October 2018, it had made a low of 756, and recent low that was made last week was 754. So clearly that's a very strong support zone. So that's the reason we've seen a pullback in this stock. So there is a possibility that if the stock sustains above 790 odd levels, then it can rally towards 820, 825 odd levels. But there again, the stock will meet with selling pressure. So one should be cautious on this stock.
All right. Just want to get in a quick gauge of, how the last 1,000 points drop on the Nifty has been and, what is weighed down, what has bucked the trend. And this is what you've got. So from the 3rd of June up until the 30th of July, that's a good 1,000 points shaved off from the recent peak on the index. And what's dragged, I want to actually take a look at what's dragged the index lower first, and then we come to the stocks that are actually bucking the trend. So Yes Bank, a big 40% drop in the same period from 3rd of June to 30th of July. You've got Indiabulls Housing dropping about 35%. You've got GAIL, Tata Motors, Coal India, all of these names dropping more than 20% apiece. Some stocks which have managed to hold out and probably weather the storm has been Sun Pharma, marginally in the green over the period, Asian Paints, Infosys, Z on the back of good numbers, and also the possibility of the deal culminating really soon. That's managed to stay afloat about 6.5% higher, and a Power Grid which is up about 8.5%. So a very defensive flavor is what you've got on the index at this point. And keeping it with that theme, any consumption name, Sachitanand, anything that you feel with a slightly defensive bet that you can take and probably have a trade going on the long side?
Well, not on a limited basis, but the way HUL has rebounded from its recent support of around 1680, there is a good probability that we may see a fresh higher top, higher bottom structure getting developed on the daily scale. The immediate hurdle for the stock is somewhere close to around 1765 if you look at the entire structure. So we are expecting that this particular pocket can be investable, and definitely any declines towards 1700 should be utilized to create or add longs. Overall, we are expecting that the support base at around 1680 looks very strong and may not be violated immediately.
Okay. Just 10 minutes to go for markets to shut shop. Volatility spikes yet again. India wicks up about 4 to 4.5% in trade. Let's get you some closing strategies from our experts. Amar, first to you, any STBT or any BTST for tomorrow's session?
Yeah, I would say that the one which I spoke about, Federal Bank, that's one stock one can look at going short. So any pullback towards 92, 93 odd levels can be used as a shorting opportunity, because it has got very strong resistance above 95 odd levels and with a target of 87 in the downside.
Okay, so that's a sell on Federal Bank, maintaining the call which Amar had given at the start of the show. Sachitanand, what about you, your closing strategy?
In fact, even I would like to reiterate the call that we discussed on HCL Tech, where we are expecting that there could be a bullish move on the coming soon. We are expecting a breakout, and the move can extend right up to 1065, so long can be added. The stop loss for the trade should be placed at around 1010.
Okay, that's buy on HCL Technologies. A few minutes to go. Amar, let's say if somebody would have initiated a short position because we had a gap up opening in the morning, would you advise them to cover their shots and go home, or would you advise carrying over the shots on Nifty right now?
No, looking at Nifty, I would suggest that Nifty is very close to its crucial support zone, because one of the moving averages, if we look at that, so that has not been penetrated prior to 19th of February. So clearly shows that the index is at a major support level. So ideally one should look at booking profits.
Okay, book profits if you have any, and if you initiated any short position on Nifty Futures today when the markets opened. We did open in the morning. The high was somewhere about 11,267. So Nifty is gyrated, by the way, nearly 150 to 170 points right now. And just want to highlight a few more stocks. Philip, Hero MotoCorp, remember the earnings will come by today anytime now. And ahead of that, the stock has seen correction. It's touching fresh 52-week low, 6% lower. Sachitanand at 2256. Would you advise any trade ahead of the earnings on Hero MotoCorp?
Well, we are of the opinion that the stock is trading very close to its support base of around 2250, 2300. So definitely on a closing basis, 2240 would be the stop loss for the trade, and we would advise creating some long positions here.
Okay, that's Hero MotoCorp for you. The other one obviously also is Maruti. When we spoke about that one, I think 5,500 odd is where it's just about trading at. That's the lowest point of the day, so that too is giving up 1% or so. Over the last 1 month, 15% given up by Maruti. And not just that, even M&M, which is, I think, at a 3.5 year low now, closer to about 550. That's where the stock has, been and previously taken supports and bounced from these levels. But the market environment is such a structure, it's so weak for the industry itself that you don't know whether this time around that support level will manage to hold or no, or you'll see a further dip on an M&M as well. Amar Singh, do you track M&M? What would the call be on the stock?
Yeah, I would say that M&M is at a very crucial support zone, which you rightly said. So somewhere around 545, 550 odd levels. And even on the yearly charts, this is a very strong support zone because if you look at M&M, this low was not made since 2014. So clearly shows that this is a very crucial support zone, and technically there is a possibility that we could witness some upside in the stock towards 580 odd levels, 590. But the stock is likely to trade and has very strong support coming around 545, 550 levels. So that's a range which I see for M&M in the short term.
Okay, Dr. Reddy's is the other one. Stock's down about 4% on the back of the numbers being slightly disappointing. But within the rest of the pharma names, the only pack that's doing okay on the index is probably IT and an HDFC Bank within the banking space. But, if you have to look at pharma, and within the mid-cap arena, is there anything that looks remotely attractive at this point after we've seen the kind of pressure that's built up? Sachit Anand.
Well, Oro Pharma is one particular stock which has been on our radar, but if you look at the overall follow-through movement, the stock has not been able to sustain above the 575 mark. So definitely on a conditional basis, in case if we see a move towards or above 575 in a day or so, I think this will be a better candidate. On the higher side, we are expecting that the recovery or the pullback move could last right up to 600. But definitely it will be more on a conditional basis. The confirmation of the same will only come once a closing is established above 575.
Okay, one stock which has moved higher is Gulf Oil Lubricants. That's up about 6% in trade, but it was down, I guess, 7% yesterday. It's only moving higher despite of markets slipping lower. I guess the numbers come out today, so ahead of that, the stock too is witnessing some bit of buying interest at lower levels. Sachidanand, would you read into this move of 6% on Gulf Oil Lubricants?
Well, the stock is very close to its intermediate support. In case, if we see a swing back towards, say, 780, 785, that will be termed as a very strong pullback. But definitely on a closing basis, the way we have seen the price action, it looks like an engulfing bullish formation. The stop loss for the trade should be placed now at 710 on a closing basis, and longs can be considered for a pullback move towards, say, 785, 800.
Okay, VIP is the other one. Of course, we've addressed the stock. It's gone up on a good amount of good earnings that the company posted, which was ahead what the street was expecting. But the stock's come off the high point, still sitting with gains of about 5 to 5.5%. Amar, on the charts, what do the technicals suggest for VIP Industries? If there is more upside, what levels would you watch out for?
Yeah, looking at VIP Industries, I would say that the stock clearly shows that 340, 350 should now act as a very strong support zone. But on the upside, again, it's 410, 420. That's a range of resistance zone. So the long-term charts, the stock remains positive. But on the weekly charts, we are seeing some consolidation. So right now, it appears that the stock will now move into some consolidation zone between 340 and 400, 410 on the upside. So it's going to be a trading range for VIP Industries for some while.
Okay, Chairman, stay on. We'll just take closing thoughts, but it's not looking all that great. Financials especially are the ones which have come off. Lots of talks about maybe the NCD issues of some of those companies now trading at substantially higher yields, and at least trades being done there, and which is what might be spooking the markets. 500 points down for the Nifty Bank, but 1% lower for the Nifty 50 and the Sensex, and we are comfortably below 11,100. Let's see if tomorrow we make a dash towards that 11,000 mark and break that or no. It's looking slightly sketchy. The mid caps and the small caps too would have tanked even further 2.5% for the small cap space, 2% for the mid cap space. Things are not looking good. This is India specific, but it's really coming out and biting us now. What's done well? Well, hardly something. Bharti maybe, TCS, so all those islands of safety have looked okay. There are some stocks which are in the green, but just very, very sketchy small gains. But look at the losses. That's the main point. If you can get the camera lower to the losses, that's where the main problem is. Yes Bank down 9, IndusInd down 7, Indiabulls Housing down 7. Rate sensitives, Hero Moto, State Bank of India, and then some of the commodity names in JSW, Tata Steel, Grasim. But essentially, financials which may have some issue or perceived issue, if not an actual issue, are all being taken to the cleaners, and this is not a very good sign. Not a very good sign for the large caps, and well, even worse for the small caps, because the kind of fall that has happened in the market breadth adversity today, Navneet, is quite telling.
That's right, Neeraj. Selling seen across the board, but the broader markets, they continue to underperform even in today's trade. So let me start off with a couple of gainers though. Bajaj Holdings was one stock which stood out, and it gained about 4 to 5% in today's trade. So bucking the trend in a falling market, though closing with gains of about 3.5%. RPG Life was the other counter which surged, saw gains of about closer to 11 to 12%. And you also had VIP reacting positively to the numbers, which were better than what the street was expecting. We did see margin expansion coming in from the company. So operationally, it was a good quarter, 5.5% for VIP, though it's closing off the high point of the day. Strides Pharma was the other one which reacted to the numbers and also the news of its subsidiary forming a JV with a Chinese company. The stock did move higher by 10 to 11% in the intraday trade, but in the end, it's closing with gains of about closer to 6%. And in the falling market, you also had Mahanagar Gas, which went up. That stock saw gains of about 2%. On the future side, there was some action seen for this counter. Whole host of losers, starting off with Cafe Coffee Day on the news of its founder VG Siddhartha gone missing. The counter opened only with lower circuit down about 20%, and it remained like that throughout the session. NBCC, after the news came in where NCLAT said that there'll be fresh bidding for a JP Infra, and the bid which NBCC had submitted earlier has been scrapped. On back of that news, you saw the selling pressure even intensifying in the last hour of trade, 12% lower for NBCC. RBI Bank, the stocks corrected nearly 30 to 31% now since the time it declared its numbers, and specifically in today's trade, it was down about 12%. Entire banking space was under pressure, and especially the PSU banking space. The Nifty PSU banking index, by the way, was down about 5%. Its constituents, Bank of India, was down 7%, which came out with the numbers. Asset quality deteriorated. Bank of Baroda was one of the other PSU banking counter which fell quite sharply in today's trade. Besides that, Havells continued with its short positions today, selling seen in cash as well. But remember, this counter has been reacting negatively post its numbers. And from the metals pack, you had Steel Authority, which fell quite sharply, where the other steel makers like JSW Steel also fell, sale closing at day's low with cuts of about 6.5%.
All right, that's what you've got in terms of the market closing. Disappointing to say the least, but that's how the markets are. You've got Nifty Bank, which is down about 500 odd points. Nifty 50, 11,000. That's going to be a crucial mark. So close at about 7.5% under from the highs that we had earlier on. See the record highs that we made. Not the steepest drop that we've seen, by the way, in the recent past, but still, that's going to weigh down on sentiment. Taking a look at what dragged on the index, to say the least, it's going to be banks. The only solace that we saw was in some of the IT names and some of the consumer names, defensives as a pocket. So TCS held out. Bharti Airtel on the bank of that Bank of America Merrill Lynch report, that stock doing well. HDFC Bank managed to uphold in today's session. Reliance caused that big drag. The stock was down about 2.5%. SBI, IndusInd Bank, a steep cut of 7% on IndusInd Bank. And these are not actually heavyweights, sans a Reliance Industry. So even the bottom weighted stocks saw the drastic cuts, because of which this led to the kind of sell-off that we've seen.
That's right, selling seen across the board. And when you even look at the broader end of the spectrum, the advanced decline only deteriorated throughout the session. So as you can see, the gap widened as we head towards the closing, and clearly in favor of the declines. 224 versus 1317 were the declines which were seen. And talking about the volatility index, that too also went up in today's trade after surging about 7% yesterday. India Wix closing with gains of 4%.
And finally, the turnover. This is going to be important to see because you've got a 1% cut. Cash volumes I think average. This is probably what we've been seeing over the last few days. So 34,500, higher on the FNO side, 13.5 lakh shares that have been traded already. But quick closing comments from both our technical experts. Amar Singh, starting off with you first.
Yeah, I would say that Nifty is close to a very crucial support zone. So anywhere between 11,000, 11,050 is a very crucial support zone. So ideally, I would say that we could see some respite there. But again, the trend definitely remains negative from a medium term and the short term perspective. So higher levels will be sold into. Upside now, Nifty is going to meet with resistance around 11,250, 300 levels.
Sachidanand, what about you?
Well, almost similar views. At the beginning of the show, we discussed, levels close to around 11,050 to be witnessed on Nifty Futures. We've already seen a swing low established somewhere close to 11,070 to 80 kind of a zone. So there could be some more further slippages, but definitely from a trading perspective, this looks like a base wherein the supports are very close. On the open interest data, we have around 32 lakh shares which are wide open, and we have really not seen any reduction there. So we are expecting that markets could drift lower, but I think around 11,000 there's a good probability of some stability coming back. So definitely, from a shorting perspective, I think already the market has covered roughly around 600 points in a span of 10 days. And if you look at the RSI, it is now quoting at 26. So it won't be a good time to create any first short positions as far as index is concerned. But definitely from a reversal perspective, we need a positive traction above 11,140 from here on, and then probably we may see some respite coming in. So definitely, this is not a place wherein fresh shorts should be considered on the indices. Level close to 11,000, and this is where we would like to book profits.
All right, gentlemen, we'll leave it at that. Thank you so very much for joining us this afternoon. And on that note, it's a wrap on Countdown from Neeraj, Navneet, myself, and the entire team that's put the show together. Thanks a lot for watching.